Networking opportunity. Yep, talk a lot. Buy each other's products. Give each other coupons. Reviews. Hey, I don't want to hear that. Unbiased reviews. Is it going, Jason? Reload that page. Yeah. Yeah? No? Okay. All right, so Jason put this this little bit of a dry topic for many of you right after lunch, so it's his fault if you decide to fall asleep. And I know this is some people asked us not to spend too much time on it, so we won't spend too much time on it. We're going to talk a little bit about some business-related stuff. And I know some of you are like, no, don't do that. But we also received a lot of private messages saying, please talk about some of that stuff. So I want to do it this way. Let's do Q&A style, okay? So that I'm not just here telling you about setting up LLCs and all that stuff. I'm not qualified to do that anyway. So I want to know what questions you have that are business-related questions. So don't all speak at once. Jason, you're going to have to run the mic. So some of the questions that I got that are typical questions are, do I set up an LLC or do I set up an S corporation or stuff like that? You know what? You have to. It depends. You have to work with your CPA on that and find out what the best type of organization is for your situation. Jason and I run 5 distinct businesses. We have 5 different corporations that we use for all of our businesses. We have 2 LLCs, 2 S corps, and a C corp. And it made sense for that specific type of business to do one thing or the other. And we took the advice of our CPA. Okay, so that's the easy answer on that. Now, one of the other topics that there was early interest on was sales taxes. How many of you are concerned about sales taxes? Okay, a few of you. Okay. Is anybody collecting sales taxes at this point? Okay. What did you do? How are you collecting sales taxes? And for what states?
Well, I checked,
hold on just a second. He's going to give you the mic. Well, we need it for the people on the stream.
Sorry, now I'm laughing. I live in Kansas,
and
so I checked with the Kansas law, and right now, Kansas is a very business-friendly place right now, and so their laws are pretty lax in terms of they really want businesses and specifically pass-through entities like LLCs to come there and flourish and thrive. So the way it is right now, and at least my understanding is that I only have to collect sales tax for the purchases that are made in Kansas and sent to Kansas individuals. So if somebody, like I live right by the state line, and if somebody in Lawrence or Topeka buys my product through Amazon and gets shipped to them, even though it's coming from a different warehouse. There's an Amazon warehouse in southern Kansas, but I don't have product there. Because I'm a Kansas business shipping to a Kansas resident, I have to collect sales tax on that, and that alone right now. And so I went into the tax area and was basically able to set that up, and because I don't know what I'm doing, I just decided I'd collect for all the local taxes and then sort it out later. So.
Okay, good. Okay. Who else is doing it? Who else? Okay, and tell us where you're collecting and how you set that up.
I already had a web business, so I already had a sales tax account for California. So I just set up the California tax in Amazon, and I just report it with my other California sales. Okay,
perfect. All right, so here's the scoop that we got from our CPA. So let me tell you, let me preface this, that I am not a qualified tax professional. I'm not a lawyer. I am going to share information with you that is, basically hearsay. I had a consultation with our attorney, a consultation with our CPA, and this is what they basically told us. First thing is, there are 2 types of taxes you don't want to mess with, even if you have a corporate entity. That is payroll taxes and sales taxes. A corporate entity does not protect you from the liability of those 2 types of taxes. So if you don't pay the right amount of taxes that you're supposed to, you are personally liable regardless of the fact that you have a corporate entity and it's the corporation doing it. Because as the manager of the corporation, that liability passes to you. So two things: payroll taxes, sales taxes. So the CPA's advice is don't mess with it. We're going to do it the right way. Okay. So then there's this concept of nexus, and there's a whole legal thing that I'm not going to try and explain to you because I don't fully understand it. But it basically means, from a perspective of the business that we're doing, that the way that it was explained to me, because Amazon has warehouses in all these different states, and because you are going to house products that you own, Amazon doesn't own the products, you own the products in those different states, you establish nexus with that state so that you're now considered as having a presence in that state. So just in the example that you explained, that even though your product is not in Kansas, you have a presence in Kansas, and you sell to somebody in Kansas, you have to collect sales taxes and report and send it to the state. When you have product that is sitting in a warehouse in a state that does collect sales taxes, you now have a presence there. So if you sell to somebody in that state, doesn't matter where you're selling from, you have a presence in that state, you're now required to pay sales taxes in that state. Okay? This is what was explained to us. So what's the liability, right, if you don't collect the sales taxes? You got to pay it. Whether you collect it or not, sales taxes have to be paid. So the other explanation that he gave me is that there's a whole law about the Internet Marketplace Fairness Act, right? You got, anybody been watching any of that? Where they basically want to tax Internet sales everywhere to supposedly, make it fair to regular businesses, local businesses. There are going to be, apparently, it's in the works. Nobody knows for sure, but there's speculation that there will be some type of cap where if you fall under that cap, you don't have to pay or collect sales taxes. And there have been different numbers tossed around in different versions of that bill, which is like $1 million versus $10 million. So if you fall under that cap, that may be a lot easier. Of course, we all want to fall over the $1 million cap, right? So even if we have to pay, right? I mean, seriously, we want to eventually grow past that. So we're going to have to pay attention. So what we're doing in our business is this, and we're going a little bit overboard. If you have the opportunity to talk about any of structure, business structure, processes, and stuff like that with Jason and I, you will find that we are overly cautious in the stuff that we do because we have so much to lose, right? So we're overly cautious. So what we're going to do is we're going to apply for sales permits or sales reseller licenses or tax IDs. Different states call them different things. For each of the states where Amazon has a physical presence, a warehouse, not a physical presence, a warehouse. If they have a sales office, that doesn't count. Wherever our product may be housed, we are going to apply for a tax ID, a reseller license, and we're going to collect sales taxes for those states. That's what we're going to do. Now, this brings up all kinds of other questions and issues. How do we pay those sales taxes? How often do we have to report it? The problem is the different states have different regulations, right? So some states may want you to report quarterly. Some states may want you to report twice a year. Some states may want you to report, once a year or once a month. From the research that I've done and from what the CPA has told me, it really depends on how much money you're earning and how much money you're paying to them, right? Because there's also a cost to the state to process your forms and, take in your money and book it and all that stuff. So the more you make, the more often you're going to pay because they want to get their money faster. So if you're only making, $200 worth of sales, they're probably going to let you file less often. So the CPA's advice and the way that he said he's going to set up, because this business of ours is not a Rapid Crush Inc. business, it's a separate corporate entity we set up just for this. We're just starting. We really have no sales. We're negative at this point, right? So he is going to open up the reseller license with a very low ball estimate, right, on how much money we're going to make to try and space out the reporting stuff as much as possible. After a while, as you start making money, of course, the states will say, hey, you're making too much. You need to now pay more often. So that's what we're going to do. Now, there are some tools that we're going to look into that help facilitate this. But Amazon will give you the reporting on sales to each state. And so you can run a sales report, right, from this date to this date. And then we haven't done it yet, but I understand you basically download like a CSV file open the spreadsheet and you can sort by states. So we're going to have our CPA do all of this for us. We'll download the sales data, we'll send it to them, and they'll do all the filings and stuff for us. What we're having him do is, the person that we use is fairly expensive. He deals mostly with larger type clients. So we asked him, hey, would you be interested in providing a service to this group of people sitting here if they're interested in having you do these tax IDs for them and all that? And he said no. He's only looking for people that want, him as a CPA and want to be long-term clients. It's not worth for him to push paper for a few bucks, which I understand. So, and the other thing I asked him was, okay, so now that you're going to go through this process for us, will you please at least document, we'll pay you to do this, document the process of like what are the URLs for you to go file these tax IDs, and what's where are the URLs to the forms, how do we fill them out and all that. So they're going to do that, and once we receive that, we'll be giving that to you in the group so that you have 1 or 2 pager that tells you everywhere you need to go. Now, why are we doing this stuff for every state when you only need to do it for, supposedly need to do it for the states where you house inventory? Well, Amazon doesn't tell you necessarily where your inventory is going to be housed, right? If you've shipped stuff to FBA already, you know that they decide where it's going to go, right? There is no specific address you send to. When you print your labels, they decide where you want to go. You may or may not have noticed, in our case, the labels said Nevada, right? So we're like, cool, we're shipping our manufacturers in California. We're going to ship to Nevada. It's going to be there real quick. While the shipment was in transit, they decided it needed to go to Kansas. So it got rerouted to Kansas while the shipment was already, had already been sent. So Amazon, turns out, can move inventory without even letting you know. So some of our products may not even be in Kansas anymore. They may have moved it. So this is true. They will move inventory around based upon, like if they notice that a lot of people are ordering from California, your product, they will move some product to California in bulk, right? So that it's closer to the customer so they can fulfill faster and less expensively. Because it costs them a lot more to ship 10 one units rather than shipping 10 in one box, having it there, and then shipping closer to their customers. So they're very intelligent, but it makes your life a little more difficult because you don't know where your stuff is going to be. Nor do you need to know other than for the purposes of the sales tax issue, right? So we're choosing to be very conservative and saying, you know what, let's not mess with it. Let's just go ahead and blanket apply for tax IDs. And I think, I don't remember if numbers 13 or 17 warehouses, 17 states that we're going to have to do this for. Yeah, they don't have warehouses in every state yet. So it's something like, it's either 13 or 17, I don't remember the number. And there's this website that I found that actually tracks, so I'll share that URL as well in the group, that actually tracks the warehouses where they are, gives you addresses for them, and also the planned warehouses, because they're building more warehouses. So you know from this website where the planned warehouses are going to be and when they're going to be deployed. There's also one more complication, right? Which is different types of products get taxed at different rates in different states. So in my research, I found out that, as an example, clothing is taxable, and I may have this backwards. It's one or the other. But clothing is not taxable in New Jersey, but it's taxable in New York. Or vice versa, I don't know which. Did I get it right? It's taxable in New Jersey, not taxable, no. Not taxable in New Jersey, taxable in New York, right? So but then let's say you sell clothing and you sell makeup, right? And makeup is taxable in both. So you can't just say tax everything, right? Because it's not. So when you go set up your tax stuff in Amazon for them to collect sales tax, by the way, I didn't say this before. Amazon does not by default collect sales taxes on FBA stuff unless you specifically tell them to. Amazon, like for example, now charges sales tax in California where they didn't used to, right? They made the deal, so now they charge sales taxes. But on our products, they're not collecting sales taxes unless I tell them to. So I have to specifically go into Seller Central, and there's an area in Seller Central where you go configure your tax policies. And there is a section there that allows you to define for your specific product what what type of category it is and what percentage of the sales tax is. So at this point, I'm just going crazy because we're going to have to create this matrix for all these different states of all the tax stuff. So the good news is this. It's okay to overcharge on sales tax. I'm not kidding, right? So it's okay if I incorrectly charge sales taxes on a clothing item in New Jersey, as long as I give that money to the state. They don't care that it wasn't supposed to be taxed. But no, I say that jokingly, but it's serious too, because I asked the CPA, like, look, I'm not going to sit there and calculate, especially when we have more products in our product line, what the little different rates and the locality rates and all that stuff is. There is a section on Amazon that says generic purpose sales tax. So we're going to code every single one of our products as that. And if we're overcharging on taxes, consumers don't sit there and do the math on the tax. They just pay it, right? So it's okay. That's how we're going to simplify that process. Jason, we need the mic. You thought you were getting a break.
Just to add to that layer of complication, often, for those of you who are selling food products, often food is not taxed or taxed at a lower rate. So just FYI.
Yeah, and so you can specify. Amazon has the tools to allow you to specify all of these different rates for the different products for the different states and all that stuff. We're not going to bother with that. We're just going to collect at the general tax rate, which is going to be higher than everything, at the highest level of that matrix, and we're just going to send that to the state because I think it's way too complicated to try and figure that out, especially when these rules change all the time. You guys know the sales taxes change all the time, right? Especially if you live in California. It's like one day it's 9 1/4, the next day is 9.75, and it goes back down. It's kind of crazy. So we don't want to deal with keeping track of that. So we're just going to tax at the highest rate and then send that money to the state. And if anything, the state will be happy. Yes, right there, the microphone.
Yes. So if I understand correctly, you can set up your Amazon account to collect sales tax, be it generic or whatever, or specific for each particular item.
Right.
Amazon will collect it and then pass it on to you, and then it's your responsibility to file.
That is correct. So Amazon they collect it during the checkout process, right? They charge the customer, and that comes in your payments. You know that every 14 days you get paid by Amazon, right? That will be part of the payment that comes to you. They don't hold on to that at all. It comes to you. And then it is your responsibility to take that money and pay the state. File the sales tax reports and pay the state. Give up trying to sit down, buddy.
We'll get in trouble if you collect like at a higher tax rate, but keep the difference.
Oh no, you cannot do that. Yes. Will you be in that? Yes. No. Anything you collect, you need to give to the state.
Can I share?
Nice try, though. Yeah.
Can I share a resource about this? Because I've really been researching this. I'm in California, and taxes are crazy there. There's a woman named Kat Simpson, K-A-T, and she's got a book out on Kindle. I actually borrowed it. If you have a Kindle, you can do the lending thing and get it for free for a month. But just to learn more about it. So she goes into detail. She's a sales tax expert. And then also in that book were the forms for all the different states because they're all different. So she gives you guidelines, tells you where to put your name, what you need to do. So some of you that might be, helpful. I found it very informative.
Yeah, that was one of my resources that I skimmed through real quick. Kat is actually an FBA seller, and she worked with a CPA to write that book, and it's very, very informative. It wasn't all inclusive of the information, but it was very, very, very good. Kat, K-A-T, Simpson, and it's taxes for Amazon sellers or something like that is the name of the book. Sales tax for Amazon sellers, or I don't know, something like that. Yeah, we'll find it and share that. That was a very good resource. But if you're not into that kind of stuff like me, you will get bored reading it very fast. So just skim through it. So I'm kind of giving you the highlights of the stuff that we've found out. But the bottom line is this. And I know it was brought up in the main ASM forum, and I don't know whether they've talked about it here, or they're going to talk about it here or not. We brought it up to Matt and Jason's attention, and they said they were going to try and figure something out and maybe bring a resource. I don't know if that's happening or not, but we were concerned about it, so we went out and we researched, and I learned all about it and talked to the CPA. Like I said, we like to cover ourselves, and I did not even know this thing about liability passing to you personally. That to me is a big deal. Now, am I telling you stop doing what you're doing, and like figure this out before you sell anything else? No, because think about it. Once you figure it out, you can always go back and pay those sales taxes on those items, right? You don't need to have collected it to pay it, right? So if you're concerned, if you sold 50 units, right, at $10 a piece, so that's $500. And if all of those went to those states, which is not going to happen, but if all of those went to those states that collected 10%, you're going to owe $50 in taxes. Is that like if at a 10% rate, right? Is that a reason for you to stop doing your business right now? No, absolutely not. Keep doing it. You can always go back and figure out and pay it afterwards, okay? Don't stop doing what you're doing, but it's something that you need to be aware, especially as you grow. And within a month or 2 or 3 or however long it takes, if that whole Marketplace Fairness Act passes, it may simplify this a whole lot for startups that are not going to reach that cap, whatever the cap may be. And let's just hope for that if it passes. That'll help us. I don't know if it'll help us or hurt us in the long run, but Julie.
Yeah. Okay, I've got 2 questions. Okay, the first one is, now, I buy a lot of consumer products on Amazon. I don't think I've ever been charged sales tax on Amazon. So my question is, if most sellers on Amazon are not collecting sales taxes and we are, does that put us at a competitive disadvantage?
First of all, where do you live?
We
What
live
state?
in Florida.
You live in Florida. So the rules may be completely different in Florida. Is there state sales tax in Florida?
Yes, there is.
Okay. I don't know. I have to look at it. For example, we never paid sales taxes in California from Amazon either. But in September of last year, Amazon started charging a sales tax. It hasn't stopped us from buying on Amazon at all. So I don't know what the answer is. I don't think it's going to really matter.
Okay.
I don't think it's going to matter. And more and more and more people are going to have to start collecting sales taxes other than the opposite. So even if it is going to bother some people, they're going to have to get used to it.
Well, if everyone's doing it, then it won't make a difference.
Yeah. It's one of those things where, even if somebody is having a little bit of in my opinion, even if my competitor has a little bit of an advantage over me and I'm losing some sales because of that, in the long run, I want to protect myself. And you make it up in the market.
Yeah, right. Okay, one more question. I just want to clarify what you're doing. So if I understand what you're doing, you're taking the states where Amazon has warehouses, 13 or 17 states. In those states only, you're collecting sales taxes.
Correct.
But you're collecting it at one generic rate,
for the state.
Oh, for each state. So for each state, you're taking the highest rate that you might have to collect it at and collecting that.
Yeah, and to clarify, I don't even define what the rate is. I don't know what it is. When you go tell Amazon to collect sales taxes, you have to tell it for this product, this is the category that it fits in. And then Amazon will calculate the sales taxes based upon them knowing the laws, right? There's one option that says generic taxable item. That's what I'm going to select for everything.
Does that mean that if it's, for example, food, that they will not collect it because it's not taxable?
If it's a non-taxable item, they will know that it's non-taxable. But if it's an item that should be charged at 5% in that state, but the highest taxes is 7%, they're going to collect 7%. They're going to collect it at that category's level. And let me try and clarify one more thing. This is really complex stuff. It's a puzzle that takes a while to get your mind around it. You only collect sales tax for an item today, before these laws change. You only collect sales tax for an item where you have a presence in that state and somebody from that state is buying from you. Right? So if I have a presence in Kansas and somebody in Kansas buys, I have to collect Kansas sales taxes from that person and then send it to Kansas. the state of Kansas. If I have a presence in Kansas and I sell to somebody in New York and I don't have a presence in New York, then I don't collect sales taxes for that purchase, right? If I have a presence in Kansas and California and Nevada and Florida and whatever, right? And anybody from those states buy from me, it doesn't matter what warehouse it's coming from. If anybody buys from me, because I have a presence in all those states, I have to collect sales taxes when the item is shipped to any of those states. So it doesn't matter, let's say now in my business, and this is a very important distinction that comes with that whole concept of nexus. Let's say that you have an existing business. Let's say you have a physical business, and you now start this FBA business, right? And you're located, like me, in California. And you're used to shipping stuff because maybe you have a catalog, right? You have a catalog business. And you're used to shipping stuff to all 50 states, and where you never collected sales tax before from your regular store online catalog stuff. Now that your business has a presence in those 13 or 17 states, everything in your business that you sell to those states, you have to collect sales taxes on. Not just the FBA stuff, right? You have a presence now. It's like you have a store there. You have a presence in those states. So now the understanding that we have, right? And remember, I'm expressing third-party information that I got. I'm not giving you legal advice here. But as I understood and as was explained to me, you now have a presence in those states when you're participating in the FBA program. Now, you won't really have a presence until your inventory actually has resided there. But since you don't know when it's going to be there, you know, ignorance is not an excuse in the eye of the law, right? So maybe. Depends. Depends how much money you have, how powerful you are. So that's the understanding. Now, we have separate businesses, separate legal entities, right? So our current business that's meant for this Amazon FBA business is not at all related to any of the other businesses. So those other businesses are not encumbered by this nexus thing. Right. Right. Yeah. So now we'd be in, you know, complicating life even a lot more. Okay. How many of you are thoroughly confused? How many of you are upset? Listen, don't let this stuff bother you. Do not let it slow you down. It's just another hurdle that most people are not willing to get through. And because you're willing to get through it, and after a while it becomes just second nature, it's just part of the day-to-day stuff, right? You're going to be way farther ahead than everybody else. You're going to be more profitable. You're going to have a successful business where other people that aren't willing to take these steps and do these things that are required because they're a little bit painful, they're not going to be in the position you're going to be in 3 months, 6 months, 9 months down the road. Okay? So don't let this stuff slow you down. Don't let it worry you. It's just another one of those things you got to do and, you know, check mark. You know, the book by Kat Simpson, one of the things that she talked about in her book was that, you know, in the beginning it was overwhelming to have to do all these things, and now she says she's got it down to a process where, you know, she knows she has to sit down on a particular day every month. She runs the report. It takes her 2 hours to sort the report, do this, fill out all the forms, and then she's done. It takes her 2 hours every month. That's not so bad if you have a very successful business, right? And then you can outsource that. You can have your CPA do that, or you can have an assistant do that. You just got to do it. So that's where we're going. We need the microphone over here. It's over in the back. Go ahead.
During the break, Nicole and I, we actually met the CPA that's going to be presenting tomorrow at 4 o'clock.
Great.
And apparently he's looking for all of our business.
Awesome.
And he is going to have a sweet deal.
Awesome.
So
okay,
4,
great.
4 o'clock tomorrow.
They brought it. So I'm sure he's going to be talking more about this stuff. Now keep this in mind. This is very important. When you're dealing with, you know, the CPA, tax-based stuff, legal-based stuff, all of these professionals are interpreting the law, right? There's a lot of interpretation going on here. So you may get different stories from different people, right? You may have a CPA telling, like Jason's CPA and my CPA, they're a little bit different in the way they treat our personal stuff. One is more aggressive than the other, and one is aggressive in one area where the other one is conservative, and vice versa. So you will talk to different CPAs who are qualified people who will have different things to say about this stuff. So what I explained to you today is the stuff that I learned from the guy that we trust and we pay a lot of money to. He may be right, and somebody else that says something different may also be right. It's just they're interpreting things a little bit different. At the end of the day, what you really want to follow is the advice of somebody who you're going to continue to work with. You don't want to go ask somebody a question and then walk away and then go do your business elsewhere and say, well, but he told me. Well, there's no vested relationship there, right? I know that if I'm audited or if there's a question or whatever, I'm not going to go to those meetings. My CPA and my attorney are going to go to those meetings. I'm going to steer clear of it. So if this guy has a sweet deal tomorrow, right, take his advice, take his business, do business with him, have a relationship with him, whoever that is, if you feel that that's the right person for you to work with, and follow the advice of that person if you trust them. We trust our guy. He tells us we have to do this tax license reseller thing on 7 or whatever different states. I'm just going to do it. I'm not going to mess with it, right? I'm not going to try and know better than he does. Yes. We're being extremely, extremely cautious. So you could wait and do, them, only as needed, and I mean, you could just not do it, There are a lot of people, I know for a fact, there are a lot of people that just have ignored this whole concept and aren't doing anything, right? And they may never have a problem. They may never have a problem. But then again, they may, right? And we want long-term businesses, Jason and I, and we don't want to worry about that liability stuff. Microphone? Okay, sorry.
Is this tax mandated at this point? Is the tax mandated at this point, or are you guys just anticipating that it may be mandated at some time?
State sales tax is mandated.
I
yes.
get that, but not on the internet.
State sales tax, where you have a physical presence and you sell to somebody in that state, you have to collect sales tax.
So is Amazon collecting it on the products they're selling in all those 13 to 17 states?
Amazon does collect sales tax.
They are collecting it.
Yeah, huge thing. That's why they moved out of Illinois for a while and Colorado, because in North Carolina, because the
right.
said you can't have an affiliate program there.
Right. Yeah.
Okay.
It was a big thing.
Okay.
Yeah.
Amazon has fought this for years.
Yeah.
And they have not played ball with anybody. That's why with California, they worked out some sweetheart deal. Because California says, you collect sales taxes or we shut you down. And Amazon says, F you, I'm leaving, and I'm going to take all my business with me. And California says, no, you won't do that, will you? Yeah, watch me. Because we did it in Texas. We did it in North Carolina. We did it everywhere else. And so California says, okay, maybe we can be reasonable. But yeah, that's why, for example, I pay no sales taxes on anything I buy on Amazon in Iowa. Because Iowa is not affected by that. But if we lived in Illinois, I'd be paying a $500 washing machine I bought. I would have paid 8% on that in taxes in Illinois. It depends on where you live and depends on which is why there's no affiliate program in Illinois, because then they try to get every single affiliate that promotes that product in that state. That complicates things 1,000% further. So if you've ever tried to be an affiliate on Amazon and you try to sell products on being an affiliate on Amazon, you will have 50,000 people on a webinar tell you, well, I'm in North Carolina, I'm in Illinois, I'm in wherever, and where Amazon has completely moved out of that state, so they wouldn't have to deal with that. But they definitely are doing it. It's unreasonable right now, and it makes no sense because it's not been codified, which is why this whatever Fairness in Marketing Act is being thrown around to try to simplify it.
Well, they're trying to just collect sales tax from everybody, period. That's what really is happening.
Yeah, I mean, if you don't collect it, you lose 10% of your business or 8% of your business because you'll have to pay it anyway, but you're paying it out of your own profit, your own pocket now.
Question in the back there, Jason. Take the mic. So again, make sure that you understand that this stuff is there's a lot of interpretation going on here. Even from a professional to a professional, like a CPA to another, they'll have different opinions. I don't know what you will hear tomorrow. Whatever it is that we hear tomorrow, I'm still following the advice of my guy, because I pay him a lot of money. Yeah. Yeah. Okay.
Actually, you're making the right decision because, as a friend of mine who's in the tax business said, there are two kinds of crimes in the government's eyes. There are minor crimes like rape, robbery, murder, and major crime. The major crime is avoiding paying them taxes. So as long as you keep that in mind, that you might get away with killing someone, but you're really going to have trouble getting away with not paying taxes.
All right. Any other? Yes, Jason.
How does this apply to? I'm from Canada. Collecting the taxes. Do we have to do anything special? Or eventually, it sounds like we will. Yeah.
Do you have an entity in the U.S.
Not yet.
Form
No, haven't done
LLC
that.
or something?
No.
When you do establish, when and if you do establish an entity in the U.S., then that entity has to play by the United States rules, and so you will need to, wherever you establish that entity, you're going to have to play by those rules.
And that's for anyone in the world, right? Like not just Canada. I mean.
Exactly. Anywhere in the world, it doesn't matter, because a corporation is a virtual person, right? That's the signification. Corporation, incorporated, became a body, right? So yes, that corporation, if it's established in the U.S., will have to play by the U.S. rules.
I'm also from Canada, and I can answer that question. Countries have tax treaties, and it may be that if you live in Canada and you're not collecting taxes in the States and you're supposed to, then they may have an agreement with the Canadian government that allows them, and actually they do have, that allows them to come after you in Canada. The Canadian government will help them. And you may find that every other jurisdiction the same way. Australia may have one. So don't just assume that because, gee, I don't live in the States, I can just ignore it, because tax treaties will not allow you. Governments cooperate when it comes to collecting taxes. We're back to minor and major crimes.
Yeah. Well, and then don't confuse like income tax and stuff like that with sales taxes. Sales tax is a completely different beast. But make sure if you have a U.S.-based entity, you're going to have to eventually deal with that stuff for sure. We had a question from Jim here up front, Jason.
My question is about, well, I'm not incorporated at all. I'm operating as a sole proprietor. Is that still considered an entity, business entity?
It's a form of a business entity, right? A sole proprietorship. I strongly recommend you look, if anyone who hasn't done it, incorporate, whether an LLC or an S corp, whatever. Talk to a CPA and establish a separate business entity. If there are lots of reasons to do that, liability protection is one of them. You're selling, for example, and again, I'm not giving you legal advice, okay? Just from stuff that I know, and I have to keep saying that because I don't want to get in trouble. But like, there's liability in you selling that supplement to a dog. What happens if that a dog has an allergic reaction to that and dies? You're going to get sued, right? Likely. They can come after you personally at this point, right? And take your house, take you whatever it is they're going to sue you for. If you're operating under, if you're a corporation, they will come after the corporation and not you personally. So they can sue the corporation and seize the assets, the corporation's assets, but nothing personally from you. If you do it right, just creating a corporation, by the way, does not give you, does not give you protection automatically. You have to do things the right way. For example, there's this term that says piercing the corporate veil, right? Maybe you've heard that in the movies or whatever. Like, for example, if you treat your corporation's bank account as your personal bank account, where you go to the ATM and just take out cash and spend it, whatever, there is no distinction between yourself and the corporation. You've lost the liability protection, right? So you keep separate books for the corporation. Business purchases are separate than this, and you have a business credit card and a personal credit card. and all that. There's a bunch of things that you have to do to make sure that that corporation is kept at an arm's length away from you as a person. So, an attorney or a CPA can advise you on all those things and what to do and what not to do to make sure that you maintain that liability protection. There's also, asset protection strategies related to that. And right, exactly. So there are lots of reasons. If you haven't formed either an LLC or an S corp, it's something that you want to start investigating. Again, don't stop doing business, right? Don't go pull your product from Amazon at this point, I wouldn't say, right? But start investigating that and what the steps are necessary and what the benefits are going to be for you based on that. Okay? How about cash flow? How about cash flow? How much as we can get? Yeah. How much cash flow? Who understands the concept of cash flow, or who does not understand the concept of cash flow? Cash flow. Okay. You have to have money. You have to have I'm trying to explain it very simply. You're going to make sales, right? And Amazon is going to hold your money potentially up to 14 days, right? If you make the sale on day 1 of that pay cycle where they're going to pay you, right? But in that 14-day time frame, you may have bills come due, right? So Amazon may be holding $10,000 worth of your money for another 2 weeks, but your bills are due today, and you don't have any money. That's a problem, right? Or you know that you have to order inventory, but your supplier needs 50% up front or 70% up front or whatever it is, and you don't have the money to pay for it, right? So what do? Do you wait to get paid? That's a cash flow problem because you know the money's coming. It's guaranteed. Amazon's not going to stiff you, right? But you have to manage that. That is one of the hardest things to manage as you grow is your cash flow. It is very, very, believe it or not, it's very difficult, and it's something you want to get good at, is managing the money that's coming in versus the money that's going out. Because one little glitch in that system, let's say Amazon tried to send you a payment and your bank rejected it for some reason. Like, I don't know, they had a data issue and one number was off, right? Are you going to be okay until it gets solved until the next pay period, right? You have to start learning how to manage that. And I won't go too deep into that because I can get pretty geeky on this stuff because we run a pretty big, business and manage a lot of money on an ongoing basis. So I'm in it like every day. But it's something that is, I've found it's one of the most difficult things to manage. And it tricks you sometimes. Jason can attest. It's like everything is going really well. All of a sudden it's like, well, but this money isn't coming from the merchant until like it was supposed to be here today, but it isn't, and there's a delay, and we have this thing due, and it's not enough. The numbers aren't reconciling. What do we do, right? So you need to start planning for some of that stuff as well. You want to get to a point where you're placing your orders ahead of you running out of inventory, right? Matt has talked about this, right? For you to run a perfect, and it's never going to be perfect, but the perfect way to do it would be that on the day that the last unit sells, your inventory showed up at Amazon on that day, right? And then on the day that the last unit sells, the stock got replenished. So there's never a sell missed because a customer saw that the inventory was not there. How are you going to make that happen? Well, you're going to learn that, and some days you're going to be out of inventory, and sometimes there's going to be too much inventory because it was an overlap. But really what you need to manage is that cash flow. You need to figure out how you can keep from running out of cash should something not come in. You never want to work on the expected stuff that's going to come in. You need to have cash in hand. So you want to get into a situation where you leave money in the bank, right, to cover X number of days or weeks or months worth of expenses, regardless of whether income comes in or not. Does that make sense? And that's something you need to strive towards. That brings me to another point. Treat your business not as your personal checking account, not as your source of extra cash. This is something that we established very early on in our business. Jason and I are employees of Rapid Crush. We are shareholders, we own the company, but we're employees. The money that we take every month is constant, regardless regardless of how much money we make. Start establishing that practice in your business. Treat it as a separate entity. Pay yourself a salary, right? And yes, sometimes you go in and you take some more, take a bonus for yourself, right? But leave money in your bank account so that you can manage, these cash flow issues as they occur. Don't treat it as don't drain your business account every month. And I do understand that you may be in a situation where that's all the money that you have coming in, and you have to, right? That's fine, but try and get to a point where you're not draining your business account. You let your business account grow, and you pay yourself a salary to take care of yourself, right? And it can be as much of a salary as you want. Try and keep it constant, but pay yourself a salary and let the business account grow, because then you're going to be able to invest in more products. You're going to be able to invest in additional inventory. You're going to be able to test those Facebook ads or whatever advertising medium. All that stuff is money that's planned to come out of the business account.
Yeah, and don't forget the 30% taxes you'll probably pay on any dollar that comes in.
Don't forget the taxes. We were guilty of that. I mean, we had enough money to pay for taxes, but every single time that tax time came along, and we pay estimated taxes every quarter, every time it was like, oh, it hurts to take money out of that account because the balance was so nice and healthy, right? And now we're like, oh, we take a big chunk out. So even from a psychological perspective, I created a separate account, and every month we put money into that account. And now, since I know that it's completely earmarked for taxes, it doesn't hurt anymore to take it out come tax time because it doesn't affect my operating account.
Yeah,
that balance doesn't go like this.
Yeah, you don't see your bank account drop 6 figures in a single day, which is demoralizing no matter how you look at it. It never enters that bank account. It goes into its own, which is specifically meant to spend on taxes.
Okay, another piece of advice I'll give you since we're talking about banking. My banker taught me this. Your business should have multiple bank accounts. Okay, you should have a bank account that is what you can call your main account or your operating account, and then you have a bank account that handles all of the electronic transactions. This is the bank account that Amazon sends money to. This is the bank account that's tied to your PayPal account. This is the bank account that your merchant accounts go to. This is the, anything that has to do with electronic transactions, it's that account. And in that account, what we want to do is we want to keep not too much money in that account. Anybody have any idea why? Because of fraud issues, right? Because of errors. If Amazon, is sending a payment and sent a debit instead of a payment, they're going to take the money out of that account, right? You don't want your operating money, the money that you need to pay payroll and pay your bills and all that stuff. You don't want that available in any way, shape, or form, related to fraud or errors that occur. Because when you sign your PayPal agreement, right, when you accept the terms, you're giving them permission to go out and take money out of that account. They decide when they do it. Of course, you trust them, and they are not going to do anything wrong on purpose. But if an error occurs, right? When you're an affiliate, for example, and you give somebody instructions to wire money into your account, they could potentially withdraw instead of putting money in, right? Through an ACH system, the automatic clearinghouse system. So things can occur. So you keep that money separate. So I have just enough money to cover any of refunds and stuff like this in that account. And then our main account, which is where we keep most of the money, is a separate account. Get a corporate credit card. Get a business credit card and run all your purchases through the business credit card. The worst thing you can ever do is use a debit card. And by the way, this goes personally too. Who uses debit cards for purchases? Bad idea. Stop using it because have anybody had their credit card number stolen or fraudulent purchases? Okay, it's happened to a lot of people, right? When somebody runs your credit card fraudulent, right? They buy something, with your credit card number. What happens? You call the credit card company and you tell them that wasn't my purchase. They take it off, pretty much, right? It's a little bit of a pain. But if somebody takes your debit card and runs a fraudulent purchase through it, what happens? The money comes out of your account. It's gone. You can still fight it. You still get it back. But now you're literally out of money in your checking or savings account. Cash has gone. And then you have to get it back. With the credit card, you have something on your statement. You never have to pay it. You just tell them, take it off. It's not mine. Money never left your hands. So don't ever use debit cards. It's especially for your business, also for your personal stuff. Use a credit card. Okay, any questions on any of the stuff that I've covered? Yes, Deborah. Jason.
Well, when we're looking at getting credit cards for our business, should it be in the business name or just a credit card in our personal name that we use for only business?
Great question. All credit cards companies use give business accounts that I know of. You know, the easiest one to get a business card through in the U.S. that I found is Chase, because they never check anything. Literally, you tell them what the business name is. What it is a personal credit card that has a business name on it, so it's still attached to your Social Security number to do a credit check on you personally, but it has the business name on the card, right? And all you have to do, really, is you need to make sure that anything that you do on that card is just business stuff. So my CPA even told me in the beginning when I first started my business is like, you don't have to have a business card per se, but take a card and consider that business and only run business stuff through it and never personal stuff. Because if you're ever audited or something like that, you can say, look, this is all my business purchases over here. This is all my personal stuff. They're not commingled, right? But it's so easy to get a business credit card. American Express is the hardest because they want to verify your business and you have to send them all this paperwork. Chase is very simple.
Thank you.
Yeah. Any other questions? Yeah, up here, Jason.
Will, you'd mentioned that there were multiple accounts for a business, and you just mentioned the main account, the account for the electronic transfers, and then a corporate credit card. Is that it?
In our case, I've also decided to split off the payroll account. So I have an account that's specific for payroll, and I don't keep too much money in there. Twice a month when we have to do payroll, I move money from my operating account to there, and that's the account that the payroll company then comes and withdraws from. I don't put that in the electronic transfers account because, again, if I were to move money into that account and then something happens before the payroll company came and took money, then now our employees would be at risk, right, and they wouldn't get paid. So I also keep a separate account for payroll. Yeah, like Jason said, we like to put a layer between our main account and everything else. Nothing touches our main account. The only income coming out of our main account, going into our main account, is income coming from the other accounts that gets transferred, and anything coming out is from the main account transferred back. So our main account is a series of transfers in and out. Yeah. Yeah. There's nothing connected to those accounts electronically or otherwise.
And then there's one other separate account for your income taxes. Is that correct?
Yeah, and then I set up a savings account. Yeah, I just set up a savings account, and every month I'll take part of our profits and just toss it in there. So I'm seeing money coming out like on a monthly basis rather than, like Jason said, you know, like a large chunk at one time because it hurts.
Do you have a...
Yeah, it helps you plan as well, as Jason's saying.
What about the sales tax? Is it in a separate account or?
Great question. So now this is a completely separate business for us, right? So the sales tax issue. It is a completely separate business. I will definitely set up a separate account for sales taxes, right? And it might as well be a savings account. And then when I need it, I'll move it back and then pay the taxes. So I'll set up a savings account. And when I run the monthly reports of sales taxes, I'll just toss that money in there and leave it there. It's very good to have separation. Jason and I have known or know several individuals, especially in the internet marketing space, who do a product launch and they make all this money and stuff. And next year, they're in trouble with the IRS because they forgot to save money to pay their taxes. So comes tax time, they don't have any money to pay. Even though they made a ton of money, you know, the previous year, they spent it all. And I'm not saying they frivolously spent. One guy, he decided, you know, to put more money down on his house than he normally would have because he bought a new house. Whoops, he forgot that there were taxes coming, right? So now he's made a bigger down payment, which is good. It wasn't a frivolous purchase, but he's still in trouble because he didn't manage his cash flow. Yeah, you're welcome. Everybody stand up. You're awake still? Everybody stand up. Shake your arms a little bit. Yeah. Yeah, exactly. There you go. Okay, any other questions? Yes, Mattson has a question.
You mentioned it briefly. Liability. There might be some liability with some of our products. Do you have some kind of liability?
Guys, sit down, please. We're still going. You got a question. So liability. That was just a stand up to get the blood flowing.
Do you have a liability insurance policy for your business?
That's a great question. We don't. The type of product that we are selling, we didn't require a liability policy. I will tell you that in one of the things that I started researching when we started this business was stuff in the supplement area, you know, and anything supplements and vitamins and stuff like that, there is inherently more liability. And so what I found is that some of the private label vendors, some of the manufacturers, had an umbrella type policy that you could be included under. So they could list you under their policy and you were covered. They also recommended that you went out and got your own policy, but definitely something that you want to consider. Now, from that liability perspective, if you have, again, my opinion and my understanding, not legal advice, if you have a corporate entity that is for that business and you didn't take out a liability policy and you got sued, today, how much would it really cost you? Close the business probably, right? As long as you did everything right and that was literally a legitimate separate business, right? Would you go out and get a policy day one? I don't know. In my opinion, for us, I wouldn't do that day one. But certainly, as I started growing and I had something to lose, I would go out and do that. But ask the manufacturer, do you have a policy that will cover us? Because a few of the vendors that I found in the supplement business actually had, and I was surprised. But that was kind of a good surprise, right?
You mentioned that Amazon has all these different warehouses, 17 or so different warehouses. Why would they have it set up such that you are not required to go ahead and collect sales tax in those states? It's almost like they have a button that says break the law, don't break the law. I mean, I know it's up to your option. You could take it out of your funds later, but they rely upon all these sellers for their business. They don't want us scattering to the four winds once all this comes down. Why wouldn't they? Don't you think they're going to streamline their system so that it makes it easy for us to do it and require us to do it, especially in the states where their warehouses are?
Yeah, if you read their terms when you're setting up the tax stuff, it's a liability thing for them. They want complete distance from it. All they are for you is they are a fulfillment service. They're providing a service. They have nothing to do with selling that product per se.
It's just like YouTube and the copyright stuff, right? You can't sue YouTube for putting up a copyright because they didn't put it there. One of their users did.
Yeah.
Amazon's taking their distance from it.
Yeah, they're completely taking their distance. And when you go sign up, they say, you know, we're providing you a way to collect it, and you have to set it up. They don't even set it up for you or make it very easy to set up. They don't handle that money, right? They don't keep it. They don't report it for you. They don't do anything. They are providing a service. And as such, they deem themselves not liable for it, right? That's their stance. So are they telling you to break? They're just giving you a platform. You figure out what you need to do. So I wish they would do better in that area. It was very, very frustrating looking for information and trying to understand. You know, Kat's book was great, but it didn't give all the answers. The Amazon site is very poor on the answers. And I'm, you know, scouring through forums and getting all these people's different advice and commentary and opinions. And, you know, you talk to the CPA and he's, you know, he tells you another thing. And I will tell you that our guy actually represents some folks that have very successful Amazon-based businesses. So when I was talking to him about this stuff, I mean, he knew exactly what I was talking about. He had been there doing that kind of stuff for other clients that make a lot of money. So, yeah, Jason, over there.
I'll talk fast then, just in case. I know that you're not allowed to give legal advice, but the only thing I really have to compare it to in terms of setting up an LLC is in real estate investing. And so in order to protect yourself not only for liability, but for income tax purposes, that you should go deep. So you're going to have an umbrella company, then you're going to have all of these things underneath. How does that relate in terms of setting something up for the internet? And also, because we're using brand names, should all of the brand names be on under one umbrella, or
That is
how
a great question.
should it work?
That's a great multi-part question. I'm glad you asked quickly. Okay, so it depends on the type. Again, my personal understanding, not legal advice. Depends on the type of corporation you're setting up. An LLC and S corps are, I believe the term for them, they're called pass-through entities, right? Where they take income and it really passes on to the shareholders, and then the shareholders pay taxes on that. So it doesn't matter how many layers deep you go, company within company within company, it's still going to pass from one to the other to the other to the other to you. So it doesn't matter how many layers deep you go, it just gets more complicated. We have a situation where we own one of the companies that then owns another company. We have that situation completely for reasons outside of this. It's because in one of them we had a partner and we didn't want to split in thirds, so we split it differently. And then Jason and I split our parts in another company, and it was for those types of reasons, not for any of this other stuff. No different though from a physical business to, as I understand, to an internet business. You're still going to collect money and you're going to pay taxes on their pass along. I forgot the second part of your question.
Oh, like
brands.
Yeah,
okay.
brands and DBAs,
brands.
really.
Brands.
Talk about the DBAs
Yeah.
too.
So what we decided to do is, on Amazon, how you can go set up you set up your legal stuff and then you tell it your name, vendor name, right? And that can really be anything you want. It could be a brand name, it could be your name, you could just make something up. It doesn't have to be legal or anything. What we decided to do is we formed this one corporation for our Amazon business, and then we decided what we're going to do for each of our brands is we're going to create a DBA, a doing business as. And then we're literally going to be using that name for the product name. So we made up this name, let's call it Sara Lee, and that is a DBA of our company. Again, we probably go a little bit overboard on some of the stuff that we do, but we want to be absolutely, above board with every little step of the way. Again, because we have so much potentially to lose. So DBAs, I think, are potentially a good thing to do for your brand names. Now, this particular brand may have several products in that line of products, right? So that's still one brand, different products in that brand. For example, if it was a makeup line, right? I could have tell me the name, the blush and the eyeliner and the moisturizer. So all of that would be under the Sara Lee brand, right? And different products in that brand. Now, if we went and sold like the RC helicopters, that wouldn't be a Sara Lee thing. It would be like some techie name thing. I will go ahead and create a DBA for that. Now, I'll tell you what we have. We haven't ever done this, but we've structured it. Nothing specifically we did. We structured it kind of on paper and in our minds, and we've prepared our CPA. That if we ever have a product that is extremely, super crazy hot, and by itself it's making millions of dollars, we will form another corporate entity and move that product over there. We'll sell that product off, and now we will have another company, because then all of the asset is protected, all of the liability is in one place, and now if we introduce a new little product that may be a vitamin or a supplement or something, and something, God forbid, goes wrong, and it's not even making us any money, but we get sued, that cash cow is protected, right? Talk to your lawyer and your CPA and understand how to protect your assets and protect yourself from liability. That's really the important thing here. Anybody else?
Let's head up the break, and we got drinks and cookies
We have
back
drinks
there.
and cookies.
You give Will a hand.
All right.
Cool. We'll take a 20-minute break, and we'll be back here